Good evening, guys. I hope you're all doing well. This is Mohamed speaking. Tonight, I'll be taking you through the basics of smart money concept, the introduction to smart money concepts. My name is Mohamed, and let's begin. So, the so what is smart money concept, and what are the basics of smart money concepts, and what are some of the terms that are used in smart money concept? So before I begin showing you whatever I have on my screen here, the basics of smart money concept. Smart money concept is just a way of trading using market structure, and when there is a shift in market structure or when there is a change in market trend, and how best to capitalize on such moves. As you can see on my screen, how to capitalize. The best way to trade using this smart money concept or market structure, as most of you know. Market structure is when there's a market trend, when the market is either trending in an upward move or in a downward move. The market usually trends in two ways, either uptrend or downtrend. So in my scenario tonight, I'll be taking you through the uptrend scenario. So let's quickly jump onto my screen, whatever you can see on my screen. So I hope you guys can see my screen. I have here just an example I have drawn on my chart here. There is an uptrend market here. So we have a low, the low point of the charts or the low point of the markets as per the point of interest from you when you are started analyzing. And then we have the high of that point. So every low has its own high. So we usually mark the low and the high and see where the market has been going from that point. So we have the last high. So the market created a new point which is higher than the previous low. So that becomes a higher low. The high, which was also broken, and it created a new higher high, confirming for us that this market is going in an uptrend. So now we have another higher high, another higher low. We have higher high, we have higher low, we have a higher high, another higher low. Then we have another higher high, which is now broken. So let me explain whatever that has happened in the simplest term possible. So as you can see, we have BOS, we have an L, we have a H, we have church, we have OB. So on my right side of the screen, we have BOS, which stands for break of structure, church, which stands for change of character or trend, change of trend. Then we have the H, which stands for the high point, the low, which the L stands for the low point. Then we have HH, which stands for a higher high. Then we have a HL, which stands for a higher low. Then we have OB, which stands for an order block. So now let me explain why these points are very, very important in trading using smart money concept or market structure. So whenever we have a low and a high that are broken, whenever we have a high broken, whenever we have a high broken, it becomes a break of structure. As you can see, guys, this is a break of structure. BOS stands for break of structure. The structure was broken, but it was not changed. So the market continues trending upwards. Another time, then we have another higher high. Then we have break of structure again, which was another higher high. So break of structure simply means the last structure, the last high, which is considered as a structure in Forex or in trading. It's considered as a structure. The last structure was broken by a new structure, by a new high. This high was also broken by another new high. So the key point is when to understand the market has changed or shifted. It is direction. The market has changed. It is trend or changed its character, which is known as change of character, as you can see here, or simply the change of trend. The immediate point where the change of trend has happened is known as a change of character. And this is important because the character or the trend has changed. I believe most of you understand what a change means and what a break means. So we have a change of character whereby the character in this trend was an uptrend and the market started to change its character to a downward move. So how do you trade best in these markets? Now that you understand the market has changed from an uptrend to a downtrend, it will start creating a lower high and lower low, lower low, a lower high. Why is this considered a lower high? Because it's lower than the previous high. Why is this considered to be a lower low? Because it is lower than the last low. I believe up to that point I'm clear. So how do you trade using this market structure or shift in the market structure? Once you see the higher high and the higher low broken all together at one move, by one move, then that is when we consider the market to have changed its character. If you don't see any break of structure before the change of character, then we don't consider that as a change of character. We consider that as an internal structure. What is an internal structure? An internal structure is when the market is not able to break the last higher high, so it creates smaller trend, or whatever you call a trend within a trend. So the market may create something within here, which is known as a trend within a trend or an internal structure. So we don't consider that as a break of structure or a change of character. Why? Because for this market to have a valid point or a valid change in character, a valid break in trend, then the higher high and the higher low must be broken all together. For example, this was the last higher high and the higher low the markets created before creating a new higher high. So this is what happened. The market moved from this point, created a higher high, and immediately came back and took out the higher low. So this higher low is the last higher low the market created before it broke or before it changed or it shifted the market structure. Market structure. Some people call this market structure shift. Some people call change of character. Some people say it's a change of trend. Altogether, it's the same meaning. As long as the higher high and the higher low are broken all together, a move like this, from this point to this point to this point. So these markets changed its character. So how do you trade? You wait for the markets to retrace and create a new lower high, lower than the previous high. And where exactly is it going to create a new lower high? It usually creates a new lower high on the last order block the market left or the market created. So before I proceed to the charts, what is an order block? An order block, this is a last bearish or bullish candlestick that the market left behind before forcing a downward or an upward move, which is an aggressive move. So for example, this move from this higher high to this point was an aggressive move. So all of this point was an aggressive move. The last bullish candle the market created was here, or the last bearish candle the market created was here, then the market ran down. So now let's talk about an order block that was created within this run. This was a bearish run, so automatically the order block that was created must be a bullish candlestick. The last green candlestick or the last bullish candlestick the market created before it reached this point. So before it changed character. So if you ever find a candlestick within this area of interest, if you ever find a candlestick within this area, which is an order block, then that should be your entry. Now, we are done with the entry. How do you exit these markets? Exit should be targeting the last low where the market created. So this was the last low before the market went back to the order block. You can see this was take profit number 1. You can use this low as take profit number 2, this low as take profit number 3. As you can see, in my charts where we will be going in a short time. So let's I believe we can now go to the charts. So let me just share my charts. I have a simple setup for today here. This was my setup for today. So you can see this was the same move where the market started from the lowest point. As you can see, the way I was explaining, this was the lowest point. The market went and created a high. It came back and created a higher low. So this point and this point is higher. So this becomes a higher low. This was the last high the market created. This area was the last high the market created. So we had a break of structure whereby the market created a new higher high. Now, as you can see, we have the first black box here. I marked out this area for the sole purpose of explaining what an internal structure is. Now, you can see the market never broke the last higher low. Sorry about that. The market never broke the last higher low, and it never broke the last higher high. So this was an internal move. All of this area that I've marked out with the black box is an internal move, or known as an internal structure. So it created a small trend within a bigger trend, and this can be used in any time frame that you wish. From the 1 minute time frame to the 4 hour to the daily time frame, this is a very valid setup you can use on any time frame. Now, you can see the market continued breaking the high, the last higher high, which was now here where it created a new break of structure. It created a new low here, which was a higher low. This was the high, the last higher high. So the market created a higher high and a higher low. The market now took out the higher high, created a new higher high, and immediately broke the last higher low here at this exact point where I have written church or change of character. I'll go back to the drawing. I'll go back to where I've drawn in a short period. Now, church, where I've written church is where the exact point the market broke or the market changed its character or its trend. Why do we say that? Because the market failed to create a new higher high and a new higher low, causing the market to rally down and break the last higher low. So now this is the point where the market stopped. This is what they are. So now this becomes our lower low, our first lower low. And now where is our first higher low? Where is our first lower high? Sorry, where is our first lower high? Our first lower high will be on the order block. Where now? What is an order block? It is the last bullish candle before the market had a strong bearish run. So this was a bearish run up to this point. So we care about where the market changed character. So before the market changed character, this was a strong bearish run, but we still have a certain green candle within that bearish run. Now that is a candlestick that is considered to be an order block, and that is where our point of interest is. That is where point of entry is. That is where we take an entry. What is the entry we are going to take? Because this market is a downtrend, we are going to sell. Why are we selling? Because the market has changed its character from an uptrend to a downtrend. Now, if the market has changed its character, how do you enter? You simply take a sell on this point. If I zoom in, you can see we have a candlestick that went inside the order block. It activated the orders, it activated the sell orders, and these markets continued going on a sell. As you can see, this market has been selling since then. So once you take this sell from this point, your take profit number one will be the last lower low where the market started from, or you can simply take where the last point where the market started from. As you can see, the market has reached that point. Simply, if I put a horizontal line here, you can see the market has reached that point at this exact moment. The market never went back to that point, and up to now is still going down. So you can see it is as simple as that. A simple 15-minute time frame can give you a very big entry. Now let me go back to where I drew everything. So Again, let me repeat what I was talking about. This market started from this point. It created a new high and a new low. So we have a higher low and a higher high. Once the high is broken, it becomes a break of structure. Now, a break of structure doesn't necessarily mean the market will change its trend. No, it simply means the market will create a new high, which is also known as a new structure or a new high. So this high, once broken, the market creates another new high. This is now considered to be a break of structure. Again, for this market to consider changing its character, we must break the last higher low in an uptrend scenario. So tonight I'll be talking about that uptrend scenario. So if this market breaks this higher low, that is when we consider to be having a change of character or a change of trend. As you can see, once the market breaks the last high and the last low, so the market went from this point, created a new high, it failed to create a new higher low. If this market was supposed to go in an uptrend, it would have continued creating new highs and new lows. So this market failed to create a new high. That is causing the market to create a new higher, a new lower low. So this is a confirmation that the market has broken its trend now. So guys, how do you trade? As simple as you simply wait the market to retrace. In every trend, we have two phases. We have an impulse move and a correction move. So we wait for price to move to correct itself. We wait for the correction phase. And how do we know it's going to reach that point exactly and come back down? Because there's an order block the market has left right there. So why was that order block created? That order block was created simply for the market to retrace to that point and grab the orders and come back to the trend. Now we have an uptrend changed to downtrend. It is the same when you're talking about a downtrend that is changing to an uptrend. If you wish to trade this simple system and simple strategy, you can just start in any time frame. Just identify, as you can see. Let me share my other screen. As you can see, this is a 15-minute time frame, yet this market has been moving down ever since. So this was a Friday. This was a setup for Friday. We still are in this trade. We are still moving downwards. If you ever took a trade on this, the market is still moving down. It never came back up. So it is trying to change trend. The simplest way of knowing if this market has changed trend is when it breaks the last higher high or the last higher low. It must break both the higher high and the higher low for this market to be considered changed or trend changed. So guys, I believe I have simply introduced you to the best way of trading or the simplest way of trading smart money concept or market structure, the simplest and the most basic way of using smart money concepts. I believe we will be talking more about this in our upcoming sessions. So make sure you like the video and don't forget to turn on the notifications. We will be having more sessions about this. So thank you, and I believe that is it for today's session. Thank you, guys.